Good afternoon, traders. It is Wednesday, December 14th, 2016. U.S. stock market is closed. Pretty wild day today. We're looking here at the Dow, and you can see how this thing, it did open down and then it did this spike. It actually went positive up here, um, got within 30, 40 points of that 20,000 mark, and then it just really fell apart here. Did come back. It bounced off this spike, but then it kind of settled back down for the close. Ended up closing down negative 119. Now, the thing that was behind all this was the Fed announced a 1/4% uh, interest rate hike. And that doesn't sound like much, but this was only the second interest rate hike in 10 years. And traders knew it was coming. They're surprised that the stocks reacted so much to it because this was pretty much built in to the market. But several weeks ago, I said a Trump presidency, a Trump administration was going to mean a much stronger stock market, and that has certainly shown to be true. And I also said it's also going to mean higher interest rates. And of course, this is just the start of it. We will see higher interest rates because we're going to have a much stronger economy. And that just goes hand to hand. That's not the end of the world, folks. It gives savers an opportunity to make some interest on their savings, and we've, believe me, I don't want to date myself, but we've had huge, just much higher interest rates than we have today. Interest rates are historical lows, and finances and economics goes in cycles, and we're starting a period of higher interest rates. So, stock markets do what they want. I don't think this is going to last. I don't think this will last into tomorrow. I'll call the Dow up for tomorrow. I think it'll recover from this right away. No big deal. We had kind of a wash day, I would call it. We did lousy with our stuff we came in with today. Ended up closing out uh, over $6,000 in negative closeout trades. But we got into new stuff, not too many positions, but we ended up positive 6,000 that we're carrying into tomorrow, and all that was and because of our gold bear stocks, and I'll show you those in a second. I want you to know that I have started intensively working on revising the portfolio. Mainly, I want to make it more diversified, and I have um, pulled out 31 candidates to add to our portfolio, and I'm going to be intensively studying those stocks tonight and probably tomorrow night also to pick out which ones we're going to put in. And then, just as nerve wracking as picking what's going to go into the portfolio, I got to pick what's going to come out. And I'm going to tell you something. I have a totally contrarian view of back testing as being a predictor of future activity, and that this makes it much harder. If back testing told all the answers, this would be pretty easy. But my experience, over 20 years of experience, has been market stocks that test very well in back testing often fail in real-time trading from the point you put them in the portfolio, and conversely, stocks which do very poorly in back testing often do very well. So back testing, in my opinion, is a kind of a flawed science, and it's never served me very well in terms of picking stocks or in the futures markets, picking markets. So it's not an easy task. I'm working on it. I want to get our portfolio more diversified. We're too heavy into energy right now, but one of the areas where we do have some diversification is I have quite a bit in um, in gold and precious metals in our portfolio, and our two trades that we made big money on today were both inverse gold bear stocks. The first of these is Dust, which is gold mining, inverse gold mining. So in other words, mining stocks took a dump today, and this thing just screamed. We bought this, pretty late in the day. Actually, we bought this. This was after the interest rate announcement, and of course, if interest rates goes up, uh, it is profitable to hold cash in a savings account and not bury gold in your backyard. And so gold took a dump. This is Dust, gold mining stock. We bought it here, and it just screamed after we got in. We have over $5,000 in open trade in Dust. And the other inverse gold stock we have is JDST. We did even better on that. Again, after the interest rate hike was announced, JDST just took off in the stream. We are holding over $7,000 in JDST. So those stocks carried the day for us and kept us from having another crappy day. So very happy about this, and this just goes to prove diversity in a portfolio counts, and I am going to be working very hard to get that diversity back in the portfolio. With a little bit of luck, I'll get out a new portfolio to all my customers this weekend. This is Trader Bob signing off. I will see you tomorrow on Thursday.